Have you ever noticed that some supply zones reject immediately, while others go deep into the zone before rejecting? Most traders think all supply and demand zones are the same. They are not. What if you could actually see where the highest amount of volume was traded inside that supply zone? Would that help you to know where sellers are most likely defending? In this video, I'm going to show you how I use volume inside supply and demand zones to identify some of the highest quality setups. You'll learn which supply and demand zones are worth taking, which zones should be avoided, how volume can reveal institutional activity, and why some zones work while others fail. Supply and demand tells us where institutions may be active, but volume actually helps us to see where they did business. Now let's get into it. Before we begin, let me quickly show you how I use volume inside supply and demand zones. Here we have a clear supply zone. And to build our volume profile, we draw our fixed range on the consolidation before the breakout. And here we have three key levels. We have our fixed value area low, our fixed POC, and our fixed value area high. Think of the value area as the range where most of the volume was traded. The value area high marks the upper edge of that range. The value area low marks the lower edge. And the point of control shows where the highest amount of volume was traded. So in simple terms, this is where the most business was done. And here is why this matters. If price gives us a sharp rejection from the top or bottom of supply or demand, we may already have enough evidence to start looking for trades. But when price starts moving deeper into the zone, that's when these levels become incredibly valuable. They help us understand where institutions may be defending their positions. And that's exactly what we are going to look at in these examples coming. Now let's say price is approaching this demand zone. Now if price gives us a sharp rejection from the top of the zone, many traders will already start looking for entries. And that is perfectly reasonable. But what happens when price doesn't reject immediately? What happens when price starts moving deeper into demand? That's where volume can become incredibly valuable. Because instead of guessing where buyers might step in, we can look at where the majority of business previously took place. Now watch what happens. Price moves deep into the demand, but notice something important. It never closes below the fixed value area low. Buyers continue defending the high volume area inside the zone. That tells me something very important. Institutions are still interested in this zone. And look what happens next. Price starts moving higher and eventually we get a close above the fixed value area high. So at that point, buyers have shown their hand. Institutions aren't just defending the zone anymore. They have taken full control. Now let's look at a supply zone. In this example, I want you to focus on one level in particular, the fixed point of control. Now remember, this is where the highest amount of volume was traded inside the zone. And watch what happens. Price goes deep into our supply zone, but you can see the sharp rejection from our fixed POC. But that tells me sellers are still defending this area where the most business was previously done. But that rejection alone isn't enough. You still want confirmation. So you wait. And then price closes below our fixed value area low. And at that point, the market gives us our answer. Sellers aren't just defending the zone anymore. They have taken complete control. And that's when you start looking for short opportunities. But this is the most important example I'm about to show. price starts moving back into this demand zone. And at first glance, this looks like a potential buying opportunity because price is returning to a location where buyers were previously active. Watch what happens next. Price breaks below the fixed POC, and then we get a closure below the fixed value area low. And now the question becomes, where is the evidence that buyers are defending this zone? In this example, there is none. Price didn't get accepted at the point of control, it didn't hold above the value area low, and buyers aren't showing any signs of taking control. So there is no reason whatsoever to be looking for long opportunity right now. Because volume isn't only helping us find trades, it's helping us avoid low quality setups. Sometimes the best decisions you can make is waiting for the market to provide more evidence. The biggest mistake traders make with supply and demand is treating every zone the same. They aren't. Volume helps us identify where institutions were most active. It helps us to find stronger setups and also to avoid the weaker ones. And perhaps most importantly, it helps us to stay patient until the market provides evidence. Supply and demand tells us where institutions may be active, and volume helps us to see where they actually did business. And if you found value in this video, let me know in the comments. And if you'd like to see more content on volume, supply and demand, and market structure, make sure you are subscribed. And I'll see you in the next one.